To it, setting up a ratio spread. Now, Jermal, you have a bunch of experience trading stock and stock options and everything else. Have you set up a ratio spread before? And if you have, what's your experience with the ratio spread? What do you usually use it for?
I've set some up before. I feel like in all the ones I set up, I probably have like a 10% success rate. Just me personally, like, and this is not scaring by y'all. Ratio spreads are a great trade. Everybody if you've traded enough, you know what I'm talking about. Everybody has certain spreads that just don't work for them. Ratio spreads don't work for me. You know what I'm talking about too. I don't know what it is
you're talking about.
I don't know what it is. I'm like, ooh, this is good. This is going to work. But I got to admit, there's times where I probably use them in some volatile names. That might be part of it. They are a lot easier to use in names that, especially if the lining up the ones that we're talking about, something that's not quite as volatile.
Totally. And first of all, yes, I definitely have those strategies and those markets sometimes where it's like everybody's getting it so big in, selling calls in crude oil or something like that. And every time Frank touches it, it's an instant loser. So everybody gets that. We're going to try to change that trend here for Jermal, because you're exactly right. This is a strategy that I think a lot of people use on very volatile markets because it looks sexy. And ratio spreads, before we get into that, ratio spreads are high probability option strategies whereby you're buying an at the money call or put or something that's close to at the money or sometimes slightly in the money, and you're selling 2 or 3, but we're sticking with 2, keep it simple, but you can use essentially any ratio, 2 or 3 out of the money options of the same type. So if I'm buying an at the money call, I'm selling 2 out the money calls. If I'm buying an at the money put, I'm selling 2 out the money puts, and I'm trying to get a net credit on it. And we'll see how the payout structure is built in there for that net credit, and if the market stays around your different strikes there. But this is considered a high probability strategy that a lot of people will use in highly volatile names because you'll toss up. And to your point, Jermal, the least success I've had is using this in high flying stocks. I remember putting on, Tesla was at $100 or so, and I put on a call ratio against Tesla because it looks great. Like you crunch all the numbers on like a call ratio in a market like Tesla, and it's like your probability of profit is 80%, and you can make, $500 or $1,000 on this. And that stock, and I'd done the call ratio around like the 150 strike. So I'm like, it needs to climb 50% for me to get to my break even. I have an 80% chance of making, $500 or whatever. And within a week, it's like 200 bid. The market has moved through all of my strikes. And so we're going to try to calm it down with a less volatile asset class here. And you could take it away with your experiences, but I think most traders will commit, a call ratio into a market that's at an upside extreme, or a put ratio into a market that's a downside extreme, right?
Yeah, exactly. And that gets to kind of one of the reasons why both of us have employed the strategy at those extremes, because again, if you see something like this, not in the case of the dollar, I wouldn't say as much so, but it might be a little bit. But the point being, if you have a stock sitting on highs like this, usually the upside calls are bid. And so that's one of the reasons why we look to do some type of trade like that, because we want to fade a little bit of that move, but not just outright fade it. Even though there is obviously an extra short call, but nevertheless, similar thing on the downside, like that's one of the reasons why you look to sort of employ a 1x2 call spread, a put spread on the downside, because of a similar type deal if the stock is on lows. And so those are the reasons why we look to do it at the extreme. There's also advantages to doing it too, because again, we do want to fade the move here.
Exactly right. Like the idea is a chart like this, like US dollars up over the last year, they're at an upside extreme. I want to get short, but I want a higher probability version of that, and a little bit of a funky payout structure where if the market just sits around here, I could actually make considerably more money than just selling a call or just selling the outright. I'm giving myself a little bit more room and a fun payout structure that could pay me if the market stays around here. So it's like neutral to bearish with the call ratio, neutral to bullish with the put ratio, usually trying to commit that call ratio at an upside extreme, put ratio at a downside extreme. And the reason why you do it for a credit is if you do this trade for a credit for the call ratio example here, then you have inherent short deltas and the market can collapse to zero and you get the credit and then you run. And same with a put ratio is the market can bounce back from, $50 to $200 to $300, wherever, and you get that credit. And so you are at the end of the day with the call ratio committing a bearish strategy that gives you the credit if the market moves lower, with the put ratio, a bullish strategy that pays you if the market just keeps moving higher. But what's particularly interesting about this setup, Jermal, is you actually do stand to make even more money if the market hovers around where it currently is, or particularly where your short strike is. You can make the credit plus the difference between your strikes if the market stays around that short strike. And that's really advantageous or really opportunistic for people who, yes, like some direction, but people like the people who watch our program who also like to profit from neutral action if the market just sticks around, right?
For sure. That's one of the best possible outcomes. I always like the outcome, kind of like what the first outcome you talk about, where it just fades from or rises big in the case of a 1x2 put spread, big from that level. I feel like it takes a lot of the indecision out of it for you a lot of times. Like you're then like, oh, cool, it moved away. I'll just going to keep, majority of my credit and I'm out.
Yeah, absolutely right. The idea is like, if it sticks around here, then I can get a pretty nice payday. But if it moves in the direction that I'm aiming for it to move in to any degree, then I get my credit and I'm out. And so it is a unique strategy in that sense. And quickly, before we jump out of here, I do want to set this up pretty quickly in the market that we were just looking at. And thankfully, this market is on the rise as we speak through those highs. And I actually already got hit a little bit on putting this together earlier. Yeah, so you can get better prices than Frank, everybody. But this is essentially the setup for that call ratio. I did this for 30 cents earlier today. Now you can get it done immediately for 45 cents. If you want to go adjust this a little bit too out of the money, you'll get a lesser credit, but your probability will increase and your break even will get even higher. So this is where I would set up this call ratio in a market like SFX. And it is really nice, Jermal. You're doing it all in for just $120 in buying power. You can make a little over 100, or if you move this down to the strikes that Frank tried this earlier today and do it for 45 cents here, you can max profit $145 and you're only putting up $140 to do so. Pretty efficient use of capital as well, right?
It is, man. And it also helps kind of, I think, with a little bit of market awareness. And for those who are new to the game, you can just understand pricing too, understand how when you're selling two of those, you just double up that price and just find the difference between that and the one you're long. And so I think learning how to price these ratio spreads, or as in this case, what we would call just a 1x2, is a very good thing for understanding how to trade in this market.